All right. Can you see my screen?
Yes, ma'am.
Yes.
Ma'am.
All right. Okay, so we didn't do taxes and subsidies, so I'm going to start there. So it says here, governments can intervene in the market by imposing taxes and subsidies. When a tax is put on a product, we say it is an indirect tax. And then we have a fixed amount per unit of output. For an example, tax imposed on petrol, alcohol, and tobacco, etc. And then a percentage of the price of a good, for an example, value-added tax. And then it says here, note, in this module, we only consider fixed tax per unit. We assume that the consumer always pays the equilibrium price while the supplier receives the equilibrium price minus tax. And then we're going to start with fixed tax per unit. And then it says that when a fixed tax per unit is imposed on a product, the producer will receive the price minus tax. That is P minus T. And then therefore, we are going to use the formula P minus T is equals to C plus DQ. Or you can take, what is it? You can take T to the other side. T is for tax, by the way. Just, okay. Right, so this is price. I'm sorry. Okay, yeah, as I was saying, so the other formula we can use, you can either use this one of P is equals to C plus DQ. So these two formulas are the same. They just simply took T to the other side. That's why it's plus T. And then we have for subsidies, when a product is subsidized by rents per unit, the producer will receive a price plus subsidy, which is P plus S. And then your formula becomes, if you can remember the formula for supply, this is where we get the formula.
Maseho,
Supply
sorry to
function,
interrupt you.
yes.
Please record. Are you recording? Sorry.
Yes, I think I'm recording. I started recording. Can I confirm
Okay.
again? Yeah, let me just check again.
No
Just to
problem.
make.
Please, someone just send a message asking for that. Yeah. Okay, Miss.
Oh, okay. Yeah, let me just make sure. Yeah, I'm recording.
Thanks.
All right. Okay. So we use the supply function. So if you can remember, just to show you where we got the formula, this one. If you can remember the supply function, it's P. We have P is equals to C plus D. This is for price, or we can say Q is equals to C plus DP. Is it DP? Yeah. So we are using this one from the supply function. So P, yeah, so P is equals to C plus D. So here we're going to have P minus T is equals to C plus DQ. And then for subsidy is a plus subsidy. And then let's look at an example. So this example, it says that the demand and supply functions for a good are given as PD is equals to 100 minus 0.5 Q, and then PS for supply is 10 plus 0.5 Q. And then the first question says, determine the equilibrium price and quantity algebraically, meaning that we have to show calculations and then also show this graphically. So remember we said that when you are assessed, you won't be asked to draw the graph. So we're only using the graph so that we can understand, but you won't be asked to draw the graph. And then every time they mention the word equilibrium, we know that we have to equate the two functions. So we're going to equate these two functions. So we are going to have Again. So we are going to have PD is equals to PS. The D stands for demand and S is supply. And then we are going to substitute. So our PD is 100 minus 0.5 Q. Then is equals to 10 plus 0.5 Q. And then after this, we add apples and bananas, like terms one side. So I'm going to take the Q's to my left. Every time something jumps an equal sign, it changes a sign. So this side, I already have a negative 0.5 Q. Then I'm going to take this one, this side. So I'm going to have a minus. It was a plus 0.5 because it jumps an equal sign. It's going to be a negative 0.5 and then equals to. And then we have a 10. Then we take this 100 to the right-hand side. So we are going to have a minus 100 because this 100 is a positive. So this will be minus 100. And then now we add. You say negative 0.5 and then minus 0.5 is going to give you a negative 1 when you use a calculator. So it's going to give us a negative 1Q. And then this is equals to 100 minus, sorry, 10 minus 100 is going to be a negative 90 with a calculator. We're going to get a negative. And then now we want Q alone. So it means that we must divide by negative 1. So I'm going to divide by negative 1. So it means that I'm going to have, so let me just write the steps so that you can understand. You don't have to. Remember, it doesn't matter how you get to the answer as long as you do it the right way. So we divide both sides by negative 1. Divide by negative 1.
Can I ask a question?
Yes, can I finish first, please? And then your Q is going to be equals to 90. Yes, you can ask. Yes, you can ask.
I can't see your screen.
Can you?
I've joined the class, but I can't see your screen.
Yeah, exit and enter again, because I think everyone can see the screen. Just so I can share and stop sharing. Okay.
We can see the screen.
You can see the screen. Yeah, please exit and enter again. Or maybe the screen is gonna come up. All right, so our quantity is gonna be 90. And then therefore we can look for our price. Remember, when you look for the price, you can use any formula. You can use the one of 100 minus 0.5, or you can use the one of 10 plus 0.5. It doesn't really matter. The answer will be the same. So I'm just going to say, therefore, it means that my P is going to be equals to 100 minus wherever I see Q, I'm going to put 90. And then, sorry, and then I will have 90 here. And then my final answer is going to be, if I'm not mistaken, I'm going to get 55. So this means that my equilibrium before tax, the price is 55 rand, if it's in rands, and then the quantity is 90. This is before tax, right? And then now if we do this graphically, I'm just going to do it graphically just to show you. Remember I said that you won't be asked to draw the graph.
I think it's 45.
Is it 45? 100 minus 0.5 times 90.
It's 55.
It's 55. Yeah, please check again. It's 55. Half
Maybe
of
he
90.
missed it.
It's 55, no?
Yes, it's 55.
Yes, half of 90 is 45. And then 100 minus 45, it should give us 55. Yes. Okay.
Yeah, it's 50.
All right. So when we do it graphically, and I repeat, you won't be asked to draw the graph. So when you do it graphically, we're going to draw both graphs. I'm sorry. So this will be, so because when you check our functions are P is equals to, so meaning that P is dependent. So meaning P is on this line. It won't be always that your P is here. Sometimes it will be here. It depends on the function that is given. So if we can check our function, our function is PD is equal to, so meaning that P is dependent, so it's on this line. And then Q is this side, so meaning Q is on this line. So this is Q, sorry. So this is Q. And then remember we said that when you have a function like this is where your graph starts. That's your starting point. So meaning that my graph for demand is going to start at 100. And then because it's a minus, it means that it goes down. The slope is going down. It's a negative, so it goes down. So it means that my graph is going to start somewhere here. I'm just going to put it here. So I'm going to say this is 100. So you don't have to write all the numbers. And then it's going to go down. So I know that it's going to go down until it touches my Q. So I'm just going to look something like that. So, again. So I'm just going to use this one and say
Sorry, ma'am, is it hundreds or 55?
it's 100. Remember when you draw the graph, this is where you start. Remember, this is your starting point from the function. Yes, this is where you start. That's where you start your graph. Even for supply, this is where we're going to start. Okay. So,
Tenth.
okay. So this is where our graph starts, 100. So I'm just going to use red for this one. Okay. And then after this one, now I'm going to draw the graph for supply. And then supply is going to start at, can we just use, okay, use purple. Supply, no, using blue. Okay. Supply is going to start at 10 because of the slope is positive. My graph is going to go up. Supply, oh, sorry. So my graph is going to go up. Okay. So it's going to start at 10. So I'm just going to assume that my 10 is here. And I'm going to say this is 10. So my graph starts here and it goes up. So where the two graphs intersect, that point we call it equilibrium. So at this point where my two graphs are meeting, the point of intersection, that's where I'm going to have this, the equilibrium, the price and the quantity. So meaning that for the quantity, remember we found that the quantity at the equilibrium is 90. So this is 90. And then the price at equilibrium is 55. So meaning that this is 55. So this one, we call it E0. Okay, so this is, let me just do it again. This is my, no, is it demand function? No, it's supply function. So this is PS is equals to 10 plus 10 plus 0.5 Q. And then this one, sorry. And then this one is a demand function. So this one is PD is equals to 100 minus 0.5 Q. So that's how we show it graphically. And then now we move on to number 2. And number 2, it says the government imposes a tax of 6 rand per unit sold. And then A, they're saying write down the equation of the supply function adjusted for tax and then graph it on the same graph as in question 1. So firstly, let's start first by adjusting our supply function with sort of writing our equation for supply function with the adjusted text. So we are going to, if you remember, we said that when text is imposed on a product, we are going to have P minus T, which is equals to C plus DQ using the supply function. So meaning that we are going to have so it's going to be P minus T, sorry, is equals to, I just want the space for my graph. So it's P minus T is equals to C plus DQ. And then we know that our tax that is imposed is 6 rand. So this will be P minus 6 rand is equals to our supply function. Our supply function from the statement is 10 plus 0.5Q. So it's 10 plus 0.5Q. And then now we want to solve for P. So we're going to take 6 to the other side. So A pulls one side. So when you take 6 to the other side, it changes the sign. So I'm going to have P is equals to 10. Because 10 and 6 look like they're friends, so they're going to stay together. So I'm just going to put this 6 here. So 6 is going to be a plus because our 6 was a negative on the left-hand side. And then everything else stays the same. So I'm going to have plus 0.5Q. And then 10 plus 6 is 16. So I'm going to have P is equals to 16 plus 0.5Q. So this is our equation of the supply function adjusted for tax. So now we answered the first part of the question. Now we answer the second part. I repeat, you won't be asked to draw the graph because our questions are multiple choice. So when coming to functions, we can either use algebra or we use a graph. So we use algebra most of the time. So now I'm going to redraw the graph again, and then we're going to introduce this supply function adjusted for tax. So I'm going to redraw what I did on the other side. So because your P is on the left-hand side, your P is dependent, so it stays on this line. So just going to draw it a bit slower. It's going to be something like this. So this is where my P, and then this one is Q. And then our function, it was 100 for demand. It starts at 100, I repeat. And then goes down here because the slope is negative for demand function. And then for supply, it's positive. So it's our supply, originally it's 10. That was before fix. So, okay, I'm just gonna use another color. Okay, let me just confirm. I want to confirm the color that I used. Okay, it's blue. Demand is red. Okay. So this one starts at 10. Starts at 10. I'm just gonna put 10 here. And then I take it up because supply function, the slope is positive. Okay, so PS, this is our PS, which is equals to 10 plus 0.5Q. And then our demand, it's PD, is equals to 100 minus 0.5. So 10 is where your graph starts, 100 is where your graph starts. And then now this point is our equilibrium. We all know that. This one is equilibrium. And then now we want to introduce the supply function adjusted for tax. So with this one, this is our equation. Let me see which color I can use. This is our equation. No.
Doesn't our graph start at 16?
Sorry?
Doesn't our graph start at 16?
Yes, it started 16. So this is our supply function for adjusted text. So it started 16. So I'm just gonna put it here. This one started 16. And then it's a supply function, so it goes up also. So this one goes up. So when we introduce this one, okay, let me just write it. So this one, it's going to be P. So it's still PS, but for adjusted text, it's going to be 16 plus 0.5 Q. All right. And then we also have the intersection there. Okay. So now, let's see. Let me just write what I found there. So I just did that. They wanted me to plot. They didn't say anything about equilibrium after text. So we're going to see the entertain that on the second question. So let me just put what I already had. So I already had this. This was 90. And then this one was 55. All right. So my graph is not drawn to scale, so please don't. All right. So B, they're saying calculate the equilibrium price and quantity with text taken into account. So now we're going to calculate our price and quantity after text. So this is after text. So after text, so remember, every time they say equilibrium, you have to equate. So we're going to equate our P's. So always it's PD is equals to. So remember, we have a new supply function. So you equate supply function with demand. So this is PD is equals to PS. But the PS that you introduce here is the one of text, this new one. So it's PD, our PD, we have 100 minus 0.5 Q. Then this is equals to the supply function with text. This one is 16 plus 0.5 Q. And then like times one side, we add apples and bananas. So I'm going to take the 100 to the other side and take this 0.5 to the. So I already have negative 0.25. Remember, the sign before the number belongs to that number. And then now I'm going to move this other 0.5 to my left-hand side. It's a plus. It's going to be a minus 0.5. And then this is equals to, I already have 16 this side. I have 16. And then I'm going to move 100 to my right-hand side. When I move this 100, it's going to change the sign. It becomes a minus 100. And then now I use the calculator. I say negative 0.5 minus 0.5. I'm going to get a 1. Half plus half is 1. So this is negative 1. Negative 1 Q. And then this one is going to be negative 100. 16 minus 100 is negative 84. So this will be minus 84. And then now I want to remove this negative one. So I'm going to rewrite this step. So please bear with me. I'm trying to show others where yeah. I know you can do it, but don't mind my long method. So it's negative 1 divided by negative 1 because we want to cancel this negative 1. So our answer, we're going to have Q is equals to a positive 84. That's how 84 becomes positive. Even if you swap these numbers around, it doesn't really matter. If you decide to take 100, 16 the other side and 0.5, it doesn't really matter. As long as you're going to get Q. Remember I said that it doesn't matter how you get to your answer, as long as you get the right answer. And then now that's our Q. Then therefore, we're looking for the price. So quantity is 84. Then now we look for the price. Our price is going to be, so it's going to be P therefore. So you choose which formula to use. So let me use the other one because I always use, so I'm going to use the one of 16. plus 0.5. Wherever I see Q, I put 84. So I'm going to put 84. So this will be times 84. Wherever I see Q, I put 84. I'm using the supply function of the new one. The answers must be the same. So this is P is equals to, I'm going to get 58 if I'm not mistaken. So it means that now my price after tax is 58 rand and then my quantity is 84. So now let's see how we can put this in our graph. So remember the equilibrium point is where the two graphs are intersecting. So which graphs are we talking about now? We're talking about the supply function of the adjusted tax, and then we're talking about the demand function. So this is that point. That's the one that they call, on your notes, they call it ES. That's the, no, it's not ES, sorry. That's the equilibrium after tax. I don't know what they call it. So that's the equilibrium after tax.
It's 80.
It's ET. Thank you. So this is ET. Okay. All right. So it's ET. So yeah, so that's ET. So it means that if you were to show it on the graph, then you would draw a dotted line, not a solid line. But again, you won't be asked to draw the graph. So I'm just trying to make you understand your notes, how they drew those graphs. So our Q for this ET is 84. So it means that this point is supposed to be 84. This drawing is not drawn to scale, so please don't scrutinize me. All right, and then the P is 58, so this will be 58. You won't be asked to draw the graph. This is just to help you understand what you're talking about. So this is the equilibrium after tax. This one is before tax. So yes, that's how it looks like.
Masego, can I ask a question, please?
Yes. Okay, yes. Let me just.
Sorry, I do understand what you're doing. Don't get me wrong, but I want to know, why do you divide by 1? I do understand like how you got to the answer. I understand the whole thing. I just want to know why 1?
Oh.
Even with the previous question.
I divided by 1. Okay, I wanted to remove the negative. So like I said, let me show you. So it's either, okay, let me do this one because I don't have a space there. So let's say you decide, so it's up to you how you want to do it. So let's say you say, I'm moving from, okay, I'm just going to use this green marker, even though, yeah. So this is PD. Let's say you want to do it this way. It's still okay. So this is 100. Minus 0.5 Q, and then it's equals to 16 plus 0.5 Q. And then you are saying you're going to move the Q to the other side. That's still okay. So it means I'm going to have 100, and then I'm moving the 16 instead of this. It's up to you how you want to do it. I just want to show you how you can do it. So, and then you move the 16. So you put 16 this side, and then you say, okay, equals to, then you still have the 0.5 that side. So this is equals to then 0.5 Q. And then you move this 0.5 Q that is negative, and then you put it that side, then it becomes a positive. And then this is positive 0.5 Q. And then 100 minus, then we are going to have 84 this side. And then this one will be just 1 Q. And then 1, if you divide both sides by 1, you still get 84. Or you can say 1 times Q, it's still Q. So I divide by the negative 1 because I just want to remove what is next to Q. So this side, you can say I'm going to divide by 1. It's up to you. Divide by 1, you still get the 84. So we divide so that next time when we have a 2 instead of a 1, you divide by 2 both sides. The aim of dividing is to remove anything that is next to Q because we want to isolate Q. I don't know if that makes sense. So I divide.
No, go ahead.
Okay, I divide because I'm just saying next time when you have a number, let's say you have a 2 here, you'll have to divide by 2 both sides to remove the 2. So because I have a -1, I'm dividing by -1 both sides to remove that -1 here. Anything that is next to Q, I need to remove it so that I can have an answer for Q. So
That's what
yeah.
I'm trying to understand, yes. So basically, that's what
Oh.
I'm saying, yes. So if the answer was -2, for example, I would have divided by -2 on both sides. That's what you're basically
Yes.
saying. Oh no, I understand that.
Yes.
Okay, no. I was
Okay.
I was like thinking, why is it a 1? It's a dumb question, I
Oh.
know, but I just wanted to understand, like, so I can know in my mind, like it's not always going to be a -1 that you divide by, but you get it based on your answer, then you divide on both sides.
Yes, yes.
Okay.
Sometimes you'll get a
Mm.
5, so you'll have to divide by 5. If it's a
I
-5,
get you.
then you divide by -5. Yes.
Thank you so much. Thank you.
Pleasure.
So,
Yeah,
ma'am,
someone
can I
else
ask a
wanted to.
question?
Yes, yes, yes.
For the graph, why do we put P on the y-axis? Because we usually put Q on the y-axis and P on the x-axis.
Okay, so we are putting the P on the y-axis because of our function says P is equals to. So if we say P is equals to, it means that P depends on Q. That's why it has to be on the y. So if my equation was Q is equals to, then Q would be here. So the P and the Q, they can change. One can be dependent and the other one can be independent. It's not like in pure maths where we say y must stay on the y-axis. In economics, they can swap places. Is it okay?
Can I ask a question on the B answer that we just did now? I see the
Okay.
last part of it. You have a therefore, and you use the formula for the supply
The
function.
supply, yes.
Will you be penalized if you use the demand function because they will give you
No.
the same answer anyways?
No, we won't be penalized because immediately when you equate, it means that whatever I get here, I can use it on either on one of the equations because they're equal. These statements means that they are equal, so I should be able to get 58 if I use the demand function. So at this point, those two graphs are equal. The functions are equal.
I use
Yes.
the demand function, but I just wanted to know if you will be penalized or not.
No, remember I said to you, it doesn't matter how you get to the answer.
Okay.
It's a multiple choice. So when you get the 58, it means, yeah, it's working.
Okay. Thank you.
Okay. All right. And then now we move on to the example for subsidy. So we're going to do the same thing. It's still the same. So they're saying the demand and supply functions for crates. I took this one from your study guide. So I just tried to put it nicely so that it's easy for us to understand. Okay, so it says here that the demand and supply functions for crates of PS are given as follows. And then number 1, they're saying determine the equilibrium, price, and quantity algebraically. And then they also say show this graphically. As I said, every time they say equilibrium, you must always know that you're going to equate. Either you equate quantities, or P's or the Q's. It depends on the function that you're given. You're going to equate the two functions. So we are going to say, so I'm doing the same thing again. So this will be PD is equals to PS. PD is 450 minus 2Q, then is equals to 100 plus 5Q. And then now we do the apples and bananas, like terms one side. So we are going to have, it's up to you. Okay, let me just take this one to the side. So this will be 450. I'm choosing to take 100 to my left-hand side. Just want to show you that we're doing the same thing. Doesn't really matter. So this will be minus 100. Let me try. Yeah, so this will be minus 100 because the 100, I took it from my right-hand side. I'm putting it to my left-hand side. So it changes the sign. Then this is equals to, I have 5Q, which is a positive. Then I'm going to take this negative 2q to the other side. It's going to give me a positive 2q. I just want to show you that it doesn't really matter. Then 450 minus 100 is going to give us 350. And then equals to 5 plus 2 is 7. This is 7q. As I said, we have to remove the 7 because we want q to be alone. So this will be 350 equals to, again, I'm just doing this step so that you can understand. I don't want you to be lost, you don't have to. So we divide by 7, divide by 7. Then now the 7 cancels the 7. And then now my q is equals to, I can say, what is it, 50?
Yes, 50.
Okay, so it's
Yes, it's
50. Okay, so it's equals to q. So 50 is equals to q. So q is equals to 50. Doesn't really matter. So I have 50. Then now my p, use anyone. Can choose to use anyone. So this is p. I don't need a space. Okay, so I'm just going to write it here. So I'm just going to say, therefore, my P is equals to used either equation. So I'm going to use the one for supply. So this is 100 plus 5, or you can use the one for demand. It doesn't really matter. The answers must be the same. So Q 50. And then we get our answer. What is the answer?
350.
350.
350.
Okay. So we're doing the same thing. Then when we draw the graph, it should be the same thing. Okay, just gonna draw it. Again, because of our function is P is equals to P is dependent, so P must be on this line. And then this is Q. Our graph for demand is going to start at 450. So this is 450. This is where your graph starts. This is 450. 450. That's where your graph starts. 450. And then now you draw a line going down. The graph starts here, then goes down. You won't be asked to draw the graph. I repeat, you won't be asked to draw the graph. And then I'm going to just use something else. And then we do the supply function. Supply function starts at 100. So I'm just going to assume and say my 100 is here. This is 100. That's where your graph starts. This one starts at 100. This one starts at 450. Then I say 100. Then I take this up. That's my supply function. PS is equals to 100 plus 5Q. This point here, that's your equilibrium. That's your equilibrium. So we're doing the same thing. So it means that here on the Q, it's 50. We got 50. Just put 50 here. Say 50. And then this side, we got 350. This should be 350. And then this one, because it's subsidy, we call it ES. That's it. So we're doing the same thing here. So that's the one for subsidy. All right. And then now we move on to number 2. So I repeated the same questions. The government imposes a subsidy of 70 Rand per crate. A, write down the equation of the supply function adjusted for subsidy, and then graph it on the same graph as question 1. So I'm doing the same thing again. So I'm just going to calculate. So for subsidy, we said we have, oh, sorry, let me just check my notes. Subsidy, we said it's going to be P plus S. So subsidy is P plus S is equals to C plus DQ. Remember here we're dealing with price is DQ. So our subsidy is 70 rand. So this will be P plus 70 rand. And then our supply function is 100 plus 5Q, if I'm not mistaken. So it's 100 plus 5Q. And then now we take this 70 to the other side because 70 and 100 are friends, like terms. P is equals to 100. When you move 70 to your left-hand side, right-hand side, sorry, it's going to be a negative 70. And then plus this 5Q. Plus 5Q. And then now we say 100 minus 70 is 30, if I'm not mistaken. And then plus 5Q. This is our supply function before, so before subsidy or after. All right, and then now we have to find the quantity.
Sorry, ma'am, can I please
No,
ask something?
sorry. Yes, so this is the function. Sorry, why am I saying something?
So
Yes.
the equation with the subsidy, you know, there's plus in it, and the one with the tax, there's minus. It's
It's
P
a plus
minus.
also. It's a plus. It's subsidy. It's also tax. Remember we said it's a supply function. Check. It's here. It's 16 plus. These
Oh,
two.
oh,
Yes, it's a supply
okay,
function
okay.
adjusted for tax. Yes.
Oh,
Supply
now I
function.
understand.
Yes, you see
All right,
supply
thank you.
function adjusted for tax, and then this one, it's a supply function adjusted for subsidy. Can you see?
All right, thank you.
Yes, yeah, so it's a plus. All right, yeah, so that's it. Then you take this into your graph. So this one has to start at 30. So it means it's going to start at 30. You just put it there on your graph. I think also on your notes it's under. It must be under it. Okay, let me see. Must be under. Yes, it's under. So it's 30. So even in your what is the thing? Even on your notes, it was there. Yeah, it's 30. Somewhere there. Oh, somewhere there. Let's see. It's yeah, this date is not nice. Okay. It's somewhere here. But my graph is not drawn to scale. Please don't mirror. This is date. Yeah, so this one will be PS is equals to 30 plus 5Q. All right. And then we go to B. B says calculate the equilibrium price and quantity with subsidy taken into account. So now we're going to equate. So what I was doing, we equate this supply function of subsidy with the demand that we had. So this will be, it's still PD is equals to, it's PD is equals to PS, the demand and the supply of subsidy. So this is PD, which is 450 minus 2Q is equals to 30 plus 5Q. And then like times one side, you can either take, so I can take the 30 this side to avoid negatives. So it's 450. Sorry, this is 450. So I'm going to take this side. And then I'm going to have, so this will be minus 30. And then this is equals to 5Q. And then this will be a plus 2Q. Again, we do the same thing. 450 minus it's 420. 420. This is 420 is equals to 7Q. And then we divide. We're going to divide both sides by 7. 450 divided by 7, it's going to be 64.28. Yes, that one. So I'm going to divide both sides. I think now I showed you how to do this. Divide, there's no need to make long steps now. All right. We divide, now we're going to have 64. So this will be 64, what? So it's approximately, but yeah, you can round it off. Yay, 64, comma. So again, this is a multiple choice. You'll see with your answer which answer is closer to the one that you got.
Sorry, 420
Ma'am?
divided by 7 is
It's
60.
60.
Yeah, but isn't it 60?
Oh, sorry, I
It's
divided by
60 minutes.
450. Oh, yes, thank you. Sorry, it's 60.
Yes.
So I divided by 450. Sorry. Oh, yeah, it's 60. Ooh, sorry, it's 60. Okay, so our Q is 60. And then therefore, it means that our price, you choose which equation you want to use. I can use the 450 minus 2 times this 60. What is the answer?
It gives us
3?
330.
330.
Yeah.
All right, yes. So that's our answer. So it's the same. We're doing the same thing here.
Eight.
Same. 30. 2 times 60. Yeah, it's fine. Okay. Yeah. So now we go to break-even analysis.
Sorry,
Right.
ma'am, before you go to break-even point, can I ask, ma'am, why do we use a supply equation when we calculate the subsidy tax?
Okay. What is your question?
Why do we use the
Supply?
supply equation? Yeah, when we calculate the subsidy and tax.
We use that text, right? Okay, let me just go back. Sorry, let me go back. Remember here we are talking about, are you asking why are we using on both of them?
Yes, ma'am.
I think from the beginning we spoke about demand and supply, né?
Yeah.
And then demand is for who and supply is for who? Let me ask you. Remember we said that when coming to this module, what you did when we started, we use it still on this coming topic. So my question is, demand is for who, supply is for who? Because I think here we're talking about producers and sellers. So my question is, who is for supply? Who is for demand?
Yeah, demand is for consumers, né? Yeah, then supply is for businesses.
It's for? So please mute your mic. There's someone whose mic's on. Can you please help with muting that person so that we can? Can someone please assist? Yeah, can someone please assist there? Who can assist us with supply and demand so that we understand?
Hi. Hello.
Yes, hello.
Can you hear
Please
me?
assist. Yes, we can hear you.
Hi, ma'am. Hi. Wouldn't demand be for the supplier and then supply be for the consumer?
Okay. So, okay, I want someone who can explain to us.
Okay.
Supply and demand, yes. I hear you, but I want you to help him understand because he's asking why are we using the supply function on subsidy and tax?
Ma'am, I think it's because the taxes are usually charged for the suppliers or the producers. That's why we're using the
Okay.
supply because they deal with it.
Okay. Do you understand? Who was asking the
But ma'am,
question? Is it fine?
yeah, even customers, ma'am, are being taxed.
But then the
Okay.
question, Akere, if you listen to the question, they're saying that the tax is charged on the producer. So the producer, you'll be the supplier at that time. So you'll be adjusting the function of supply function, not on the demand based on the question.
Thank you. Does it make sense to someone who was asking?
Yes, ma'am.
I know.
Thank you.
Sorry,
I
can you
think
just sorry,
yeah,
can the
okay.
guy that just explained just type that in the chat? I couldn't quite get it. If that's okay.
Yes,
Could
it's
you just
okay.
type it in the chat?
Can you
Okay,
type
I
it in
will
the
do.
chat? Yes. I think that
Okay.
was
Thank
the
you.
yes, it's clear. We can move forward.
Yeah, it's not
Okay.
clear, but yeah.
Yeah, you know, you should, if this module is a bit difficult to relate it into real life, you can also go to ChatGPT. It explains. It makes it very easy to understand. Because we're in
Oh,
economics. Yeah, it makes it very easy.
oh,
It
this is
just,
economic.
yes, it's economics. It's not like pure maths. This is
Yeah, ma'am.
economics.
Okay.
Yes. So just go to GPT. It makes it nicely. Just ask. Guys, please mute your mic. I can hear myself. All right. Okay. So now we're going to break-even analysis. Okay. I'll try to put easy explanations next time. So it says here. Okay. Let me go to the notes. Okay. So from your study guide, it says in business, it is usually very important to know how many of a product should be sold to break even. And then when the income from selling the product equals the cost to produce or buy it. I think we did this in before. I think it was our first or second lesson. I remember break-even point. And then here I said that the break-even point is the level of production or sales at which a business total revenue equals its total cost. At this point, the business makes neither a profit nor a loss. So at break-even point, your total revenue is equals to your total cost. We did this, I think I remember this part. When we
Yes, we
started.
did.
We did, ne?
Yes, we did.
All right, so I'm going to remind you again. So we have an example here. It says a firm sells a product for 50 Rand per item. Their fixed cost amount to 200. So if we analyze the statement, they're saying that a product for 50 Rand per item. So I think we did this. We said that the last time, this is our total revenue. This, if they say 50 Rand per item, we know that this is TR because we said that TR is equals to, I think it was P times Q, if I'm not mistaken. It was P times Q, P being the price per item. And then the second part, it says there are fixed costs. So this is FC. Fixed cost is FC. So it means that my FC, they're saying is what? Is 200. FC is 200. And the variable cost is 30 Rand per unit produced. So this is our VC. Our VC is equals to Q times C, cost being a 30 Rand. So this will be 30Q. This one is going to be 50Q. Then now we go to the question. The question says, how many units should the firm produce and sell to break even? So when we say how many units, we are looking for Q. So now we're going to use what we have. So remember, when we talk about break even, it means that we have to use total revenue is equals to total cost. So this will be TR is equals to FC plus VC because we said that our total cost is FC plus VC. So now we substitute our total revenue, it's 50Q, then it's equals to, I think I showed you here, our FC is 200 plus our variable cost is 30Q. I showed you there. This is a variable cost. This is 30Q. And then now we have to solve for units. So meaning we're solving for Q. So this will be like times one side. You can take this 30 to the other side. So this will be 50 Q and then minus 30 Q. And then this is equals to 200. And then now 50 minus 30 is 20 Q. Then this will be 200. And then now we divide both sides by 20. We've been doing this, but now you should get it. No offense. So this is 20, divide by 20, divide by 20. Well, I can just do it the longest way again, just to make you understand. This is Q. So I'm going to divide by 20 both sides. So this will be divide by 20 and then divide by 20. And then our Q is going to be equals to 10 units. And then now we move on to B. They're saying calculate the value of total revenue and total cost at break even. So at break even, we found that we have 10 units. So our TR, we know that our total revenue is 50 Q. And then we found that our units, it's 10 units at break even point. So wherever I see Q, I'm going to substitute it with 10. So this will be 50 times the 10. And then we get the answer. What is the answer? Please assist.
500.
500, thank you. And then the total, and then the total cost. Total cost, we have, total cost is FC, fixed cost plus variable cost. Our fixed cost is 200 plus our variable cost is 30Q. Wherever I see Q, I'm going to put 10. So this is 200 plus 30. Then I'm going to put 10 wherever I see Q in brackets. Then use your calculator, please assist.
500.
500.
500. 500. So this is the total cost and the total revenue at break-even point. At break-even. We did this, I think, somewhere, but yeah. And then now let's move to consumer and producer surplus. So what I did is, because we said that we are not going to be asked to draw the graphs. So what I did is I tried
Masiko?
to, yes.
Sorry, ma'am, sorry to disturb. Just one question on the break-even analysis. So let's say the question didn't specify that the VC is per unit. Is it okay with me to assume that is per unit? Because sometimes they say VC is equal to 30 Rand and not say per unit. Is it okay for me to assume that VC is per unit and then continue my calculations with 30Q? Not sure if I'm making sense.
I think they should use a term, because here I see they say each. Per unit, per item, each. I think they should say something.
Okay, no, sorry,
Yes,
just that I came across a question where they didn't specify if VC was per unit or each. They just said VC at this price. Yeah.
Oh, yeah, you see now they're telling you that VC is. So if you can check in this question, we are not, are we told here?
So what they said here is VC, where is that?
Variable
VC
cost,
is,
yes,
at 30, and they just specify that it's per unit.
It's per unit, yes.
Yeah, this specific question, they didn't say it's per units. They just said
Okay.
VC at this price. Is it okay
So
with me to
already they
assume?
give, yes, it's yes, you can assume, because they're telling you that that's your variable cost.
Okay, perfect. Thank you so much.
Yes, pleasure. Because I can see here on your activity, they didn't mention that it's a variable cost. They just said each. So you should know that that's a variable cost. So if they say it's a variable cost, then you know it's a per item or per unit. All right, thank you for that question. Let's go to consumer and producer surplus. They're saying that from your note, okay. They're saying that consumer surplus is the difference between what consumers are willing and able to spend on a product and what they actually spend at the market price. And then they're saying a market price of a product is often lower than the price that consumers are willing to pay. I'm reading this from your study guide, please forgive me. And then they're saying that a market price is given by the price at equilibrium. And then the price that consumers are willing to pay is given by the demand function. Market price is given by the price at equilibrium. The price that consumers are willing to pay is given by the demand function. All right. So what I did is I did some research, Nyana, and then I decided to calculate consumer surplus like this because we said that we're not gonna use graphs. So what I did is I went and found this formula for consumer surplus, where it's CS is equals to half times Q naught. Your Q naught is your quantity demanded at market price, and then times P maximum, and then minus the P market price. P market is market price, okay? So if you can remember from your notes, we said that the equilibrium point is EQ, not E naught, no? Equilibrium point is E naught is equals to P naught and then Q naught. So it means that this Q naught is what you get from your equilibrium point after you equate and solve. That's your Q naught, all right? And then the maximum price, I said here, that is the maximum price consumer is the price that consumers are willing to pay. That's your demand intercept. That's where your graph starts. When you're drawing graphs, I said that if it's 100 minus, your graph starts at 100. That point, we call it an intercept. It's a demand intercept. And then the market price, I said the market price is given by the price at equilibrium. So meaning that that's your P naught. Market price is P naught. I even said it here. Market price is given by the price at equilibrium. So now let's look at the example. I'll try to incorporate this with the graphs that are on your, on your study guide, and let's see if it makes sense. So I have an example here that says, suppose the demand and supply functions for a product are, by given that, and then they're saying find the equilibrium price and quantity. Immediately when they say equilibrium, it means we must equate. So we are going to have PD, PD, I'm going to try and incorporate this. Okay, PD is equals to PS. So this is 15 minus 0.5 Q is equals to -3 plus 0.5 Q. And then now we do the like terms one side. So it's up to you. You can take the Q's one side there, doesn't really matter. So I'm going to say, okay, this is 15. I'm going to take 3 to my left. Then this 3 is going to change and become a plus because the 3 was a negative. And then I'm going to have equals to, then is 0.5. I already have 0.5 Q. And then now I'm going to take this one to the right-hand side. It becomes a plus 0.5. And then now we do the things. 15 plus 3 is 18. Then it's equals to 1. Half plus half is 1. So you divide both sides by 1, you get the 18. So your Q is equals to 18. All right, so now that's our quantity at equilibrium. Then therefore it means that our price is going to be equals to, choose one function. So I'm going to use the one of 15, 0.5. Wherever I see Q now, I put 18. This will be 18. And then my answer is going to be 6. Thank you. 6.
6.
All right. So therefore, this means that my E naught, my equilibrium, this is going to be, which is P naught and Q naught, is going to be equals to 6 and 18. So what does it mean? It means that my maximum price is 15. No, it's not 15. Oh, we have to solve that. Maximum price is 18. No. Okay. Sorry. Okay. Now let's put this on a function. Let me see if I can do what they did there. So let's put this on a function on the graph and see what is it that we're talking about. Okay, I'm going to try. Because I realized that the study guide sheet was saying a lot of things. Again, because my function is P is equals, it means P is dependent. So this is P. And then this is Q. Okay. And then our graph is going to start at 15. So let's see if we can do this, what they did there on the study guide. So I'm going to assume that 15 is here. I'll try 15. And then, yeah. So now we have to do the, what do we call it? What do they call it? They have a name for it. What is that? I call it the x-intercept, but yeah. So we have to find this point here. Can someone assist? What do we call this point here in economics on this? What do we call that point? This one.
Is it not the midpoint?
No, it's not the midpoint. Is where at this point is where your price is 0. What do we call that point? See, I forgot it now. It's where your price is 0. This one. This point you see here.
Break even.
No. Break even is where they meet, where your two graphs are meeting. Your demand and supply. No, not demand and supply. You not that.
Which
Sorry.
point?
I'm talking about this point. Okay, let me just do this. So to find this point, I'm going to say, I wrote it somewhere, but I don't remember where I wrote it. Okay, so it's 0. Okay, so this is P. Yes, 15 minus 0,5Q. And then I put 0 here. I forgot what we call this point. And then I solve for Q. What do we call it? Then I take this to the other side. 15 is equals to, what do we call it? No, it's not. No, it's not point of intersection. Point of intersection is when the two graphs are meeting. Yes, it's x-intercept, but I'm trying to run away from x-intercept. I want another.
The turning point.
It's a what?
The origin.
Turning point.
No. It has a name. Can you give someone?
I think you were written.
X is the shortage.
Is it not the point of origin?
No. There's a name for it. Let me see again.
It's called free good.
We call it what?
Free good.
It has a name. I forgot what I call it. It has a name.
Is it not the saturation point?
Elasticity.
A what?
Saturation point.
Elasticity. No. No. I think it will come. Let me just solve for it. I know that this is where we put the price is zero, like it's zero. PD is zero. This is zero. And then okay, I'll remember it just now. It's somewhere there on the study guide. It's an x-intercept, but I can't call it an x-intercept. I know that this is a demand intercept. This one and this, okay. So I'm going to solve for Q. Why am I putting D? I'm going to solve for Q here. So I'm going to put 0 because at this point, my price is 0. At this point, the P is 0. So I put 0, then I solve for Q. Then I take this to the other side. So this will be negative 15 is equals to negative 0.5 Q. And then I'm going to divide by 0.5 both sides because I want to solve for Q. So divide by negative 0.5, divide by negative 0.5, and then my Q, these two are going to cancel. Then Q is equals to, I'll remember it just now. So this will be 30. So this point is 30. So on your study guide, this point, they found 200. That's how they got the 200. I don't know. I thought they solved it on your study guide. That's how you get this point where your graph touches the Q here. You put P is equals to 0, then you solve for Q.
Okay, ma'am, I
Ma'am?
think I found it.
Yeah, what is it called?
Is it
The P1,
point of
the
origin?
one that is in a Y axis is a, but they call it a vertical intercept. And then the one
Yes.
in a x-axis, they call it a horizontal intercept.
Yes. Yes, vertical and horizontal, yes. That's where your, but there's a name. Ugh, it's just
Is
there,
it
but
not
I
the
can't.
origin?
No, origin is this one. This is origin. This is origin.
Is there?
Yes.
Okay.
Yes. But I'll get it. Don't worry, I'm gonna get it. It's just there, but I can't. I remember, but I
Is it
didn't
the
write it
roots of the
down.
function? Roots of the function.
Quantity
No.
exists.
No, no. It's fine. It's okay. It's okay. It's fine. So let's try to relate this with what we got.
Point.
Ah?
Shutdown point.
No. No. Okay, so let's try to incorporate this with what we have in our graphs on our notes.
Very good.
So to calculate your equilibrium price and quantity, we found them. And then remember, that's your point of intersection. That's where the two graphs are intersecting. So in this case, they only drew one graph, which is your demand function from your notes. So this is how they found. So this was, it's 6 and 18. This is what they did. This is your equilibrium, it's 18. So they did this, and then the other one is 16. Okay, I'm just gonna try. They did something like this. Sorry. They did something like this. And then this point was their E naught. So this is where their E naught, where it was a 6 and 18. A 6 and 18. So because we won't be using graphs, I tried to find a way for us to calculate the consumer surplus. So in your exam, obviously it's an open book, it's a multiple choice. You can use this formula to calculate the consumer surplus. I don't know if this is in your assignment, but yes. And then, yeah. Okay, so our market price is 6. All right. And then our, what is it? Our quantity demanded at market price is 18. Q naught is 18. So now let's calculate the consumer surplus. Consumer surplus, we need Q naught. We know that our E naught is, what is it? We got 6 and 18.
That means the 18 are in the wrong area on the line, isn't it?
The 18 is?
It's supposed to
on
be
the
on
wrong. Thank you. Yeah, put it on the wrong. It's on the wrong side, ne? Here. No, this is P. P is 6. Yeah, thank you. Right. Yeah, now it makes sense. Yes, this is 6. And then this is 18. Thank you. Thank you. All right. So now when we calculate the consumer surplus, CS is equals to, the formula says half times Q naught. Again, I repeat, I found this formula because we are not using functions. We're not going to use no graphs, sorry. And then this is P max. And then minus P market price. Mute your mic, please. And then this is 1/2 times our P naught. What is our P naught? Q naught, oh Jesus. Q naught.
6.
Quantity demanded at market price, it's 6, ne?
It's 18.
And then
18.
times,
No, it's not 6, it's 18. Q is 18.
it's 18. Yes.
Yeah, Q is 18.
Q is 18. Okay, yeah,
Yeah.
thank you. 18. 18. Okay, yeah. And then P maximum, the maximum price that consumers are willing to pay is how much?
Isn't it 15?
It's 15. Is it not 15?
Yes.
Yeah.
It's 15.
Because we said that it's a demand intercept. Yes. It's 15. And then minus the market price, we got 6, ne?
Yes, 6.
Yes. Someone please assist with the calculator.
Eighty one.
It's 81.
81. Okay. So this is 81. That's our consumer
81.
yeah, that's our consumer surplus. So it means it's 81 rand. So that's how they do their calculations. So I was trying to run away from these graphs because I can understand them. But the question was, will you be able to understand them? And another thing is that we're not going to use graphs. We're not going to be asked to draw functions, graphs. So I thought it's pointless to try and, yeah.
Sorry, where do we get the Masiko, before you move on, how did we get the PMAX?
P max, remember from the
function?
I said P max is what? P max is your demand intercept. Demand intercept is this. This is your demand intercept. This is where your graph starts, remember? Demand intercept. This is P max. Where your graph starts is, we call it a demand. This is an intercept. Ne? It's an intercept for demand. Is it fine? That's why I made sure that I write it here. I said that the maximum price consumers are willing to pay is your demand intercept. Demand intercept is the 15, where your graph starts. And then also, if you can check from your study guide, their demand intercept is 100, because that's where the graph starts. If you can compare these two with your study guide. You can
Okay,
also,
thank you.
yes, you can also use these calculations to solve the example on your study guide, just to see if it makes sense. Is it fine? Okay, that's why I ran away from using this example. I wanted to use my own example so that you can compare the two. And then we go to, okay, I also did the producer surplus. So they're saying here, the market price might be higher than the minimum price, okay, at which producers are willing to produce. So this is for your surplus. So again, I tried to run away from the one in your study guide. I found a formula also for producer surplus. This is PS, ne? This is PS, not CS. That's PS. This is PS. Okay. So PS is equals to half times Q naught times P market minus the minimum price now. So Q naught is still the same, equilibrium quantity is the same thing. It's not gonna change. P minimum, sorry, is the minimum price consumers are willing to pay, which is the supply intercept. So this is where your graph starts. So it means that for this one now, your 6 is your supply intercept. This is the demand intercept. This is a supply intercept. So this one we call it a supply intercept, which is P minimum. Okay, let me just write P minimum. So this is P minimum. And then this one we say it's a P max. And then I use the same example. Suppose the demand and supply functions for product are, then you find the equilibrium price. Again, you equate, doing the same thing again. We equate, so it means we're going to have 30 minus 2PD. So 2P is equals to 6 plus 2P. And then now we solve for the P. We take this to the other side, this one to the side, we can just say 60. 6 or 30 minus a plus, yeah. Okay. This is, minus 6, because we took it to the other side. And then this is equals to 2P. And then we take this 2P to the other side, becomes a plus 2P. And then now we just add and minus. 30 minus 6 is 24. Then this is 4P. And then now we solve for P both sides, 24 over 4, and then 4P over 4. So we divide both sides by 4. And then your P is going to be equals to, what is 24 divided by 4?
6.
6, thank you.
6.
6.
All right. So P is equals to 6. And then now we found the quantity. So this will be Q is equals to, use any equation, minus 2. And then we substitute with the 6. And then what is the answer? Please assist.
18.
18.
18. So it means that now we have the Q naught and the P naught. So P naught and then Q naught, I hope I'm writing it correctly, is equals to 6 and 18. And then now we do the PS. So this will be P producer surplus
18.
close to half times Q naught times P, what is this P? P market price. This is market price. Sorry?
18.
What's 18?
It's P max.
Eh? What are you guys saying? P market minus P minimum. And then
Okay.
this, yes, we're doing the
P max
surplus
or
now. We're doing
minus.
the producer. The producer now. Remember, this is the consumer. This one is the producer.
Okay.
And then times your Q naught. Q naught is 18. Then times market price is 6 minus, is it 6 minus 6? Weird. Okay. Minus 6. And this is, gives you us what? 0.
Minus 30.
Minus. It's 0.
minus
6
0.
minus. It's a 0. 6 minus 6 is 0. Everything becomes a 0. Again, I found this on the, just found this formula somewhere, this question somewhere. I just wanted to show you calculations. So should you be asked to calculate the consumer surplus, this is what you do. Producer surplus, this is what you do. Again, you're not going to be asked to draw the graphs. Remember, it's a multiple choice assessment. Then that's it. So we are done. Any questions? I repeat, I used this so that we can understand, because you're not going to be using graphs. I didn't see the point of me explaining the graph. Okay, so can I stop the recording now? Because some people are complaining about me stopping the recording. It's too long. Please mute your mic. Can I stop the recording?
Yes, you can, ma'am. But can I please ask something?
Yes, you can.
Yes. Okay, what's
Can
the
you please
question?
Yes, please,
go
ma'am.
up just a little bit? Go to
Okay.
the TR,
recording,
the fixed,
meanwhile.
whatever.
Okay, let me not stop it now. You were saying what? I'll stop it after 5 minutes. You were saying I should go up.
Yes.
Okay,
Here,
where?
yeah.
Okay.
Yeah. So I see here you said TR is equal to 50. How did you get that
50Q.
50?
Okay.
50Q, yes.
Yes. Remember from I think it's the first unit, this first chapter, we said that total revenue is equals to P times Q. P being the
Yes, ma'am.
price per item. Ne?
Oh, yes.
Yes. So the Q stands for your item. So if I had 2, it was gonna be 50 times 2 of them.
Yes, ma'am.
Do you understand? Yes. So
Yes.
that's our total revenue. It's
Oh,
50Q.
so we're just gonna take the 50 rand from the statement products for 50 per item. So just because we don't have a Q. Oh, now I understand.
You
Oh, now I
understand?
understand. Yes, thank you, ma'am.
Yeah.
Continue.
Okay. Next.
Hi, good
Masiko,
evening,
how did you
ma'am.
get this?
Okay, here. Yes.
Okay, I hear you say we're not gonna be asked to draw the graphs, ne? I just wanted to
Yes.
find out if will there be a question where it's gonna be a question and then there will be graphs like multiple choice where we have to choose a graph.
No. Because
No.
if you don't ask you to draw the graph, it means that I cannot give you a graph. Remember, if a graph is a part of a multiple choice, it means you are drawing the graph.
Yeah. Okay.
Yes. So it's the
All
same as
right.
you drawing the graph, then you get to choose the right graph.
Okay. All right. Noted. Thank you.
Okay.
Ask you to interpret the graph.
No, I don't know if Nolas is here, but if I remember correctly, she said you're not gonna be asked to draw the graph. Therefore, I don't think you'll be asked to interpret the graph. Yes.
So can I ask you to go to the last question or answer that you did, please?
Okay.
And then this P market and P minimum, why is it 6 times 6? Because I'm trying to see now where is the other 6 coming from?
It's remember we said that we calculated our equilibrium price and quantity. We got 6 and 18, right?
Okay, yes.
And then we are saying that when coming to the formula, we're saying that the market price is always the P that you get when you do the equilibrium. That's your market price.
Okay, yes.
Okay. And then the minimum price, we say that the minimum price is a supply intercept. Supply intercept is always this value. When we say intercept, is where your graph touches, where your function touches where your graph touches the x-axis or the y-axis, where it touches here. So remember the graph for supply, it goes up. It starts here, it goes up. So this point is what? Is 60. So this point, we call it an intercept. That's why it intercepts, yes. So this is 6. So we are saying that every time your P minimum is your supply intercept, and then your P maximum is your demand intercept, which makes sense because this is a maximum price of demand. This is the minimum price for supply. Yes, so this is your P max for demand function, because the demand function always starts here and goes down. Supply function starts down, goes up. So when I ask you to calculate the consumer surplus, you will always, it's the maximum minus your market price, because this will always be bigger than your market price. But for a producer, the market price will always be bigger than your minimum price.
Okay.
That's one, yes.
Thank you. Thank you, Masego.
Pleasure. You can just try to take this example and try to calculate your producer surplus and your consumer surplus. I think it will make things easy. Because with the graph, it's when you are given the graph, then you have to interpret. That's how you solve. And another thing, the reason why I ran away from the graph is because on the graph, you're calculating the area of your triangle, and you also calculate the area of a square. Area of a triangle is half base times height. Area of a square is length times breadth. So I ran away from the graph. So if you are asked to draw the graph and interpret, I was going to do it graphically, but because we are always calculating, I try to find the algebraic way, that way, yes, to do it. So I'm going to stop the recording now. I think that's enough. Any other question? I think.
And then what about in an exam? Would they ask us to draw or interpret the graph?
The same applies. That's why I said